Coronavirus hit close to home from a governmental standpoint this week. The president contracted coronavirus, and a stock that we've highlighted a few times was a drug that he took. Other stocks in this industry are still making news. Let's take a look. It's interesting how coronavirus, the whole idea of coronavirus, hit home from a governmental standpoint this week. The President of the United States came down with coronavirus, all right? Now, interesting that as we look at that happening, and, I didn't want to say close to home just in general because there's a lot of us who have been affected by either personal COVID-19 or family members or really close friends. I know I've got a lot of close friends that have come down with COVID-19, all right, or coronavirus. But when you see it in the highest ranks of the government, if you hadn't already taken notice, you should, all right? So it is a serious thing. It is a serious thing. I look at my parents. I try to touch base with them as much as I can. I know in the past I haven't as much as I should have, but I try to, make sure, especially going through this time, make sure that they're okay. And I think that all of us, just from a human perspective, need to check on people you care about, especially people that you love. So I say that because one of the drugs that we've had highlighted in Trending Thursdays was Regeneron. Regeneron was administered to the president while he was at Walter Reed. And a story comes out, this was today, Regeneron requests emergency use approval for antibody treatment taken by Trump. And the stock rose 4% in pre-market. So I hate to pose it this way, but there's a lot of stocks in this space that are prime to make money. And I hate to make money off of people's misfortunes. But from a stock perspective, what do you buy? You buy stocks that people are going to invest in. You invest in stocks that people, that will make money. So Regeneron is out there. This is a stock that we have talked about on more than one occasion. The Regeneron REGN COV2 monoclonal. I hate the big words. Joey, spell that out. Monoclonal. Sound it out. All right, antibody coronavirus therapy is what President Donald Trump took last week. The biotech company said if an EUA is granted, the government has committed to making these doses available to the American people at no cost, and would be responsible for their distribution. That's huge. All right, that's huge. Now, as I go back, I have another story that deals with this, and Moderna. Moderna said the company is also willing to license the technology behind its experimental corona vaccine. They are not going to be pushing to enforce vaccine patents. Normally, when a lot of these pharmaceuticals come out with something, they have the patent on the drug, which is why if you need the drug, you can only get the real version of the drug. But as time goes along, when a company loses their patent, then you can get generic drugs. All right, which are tending to be a lot less expensive. But Moderna is already pushing not to enforce the patent on the drug during the pandemic. So that's two different companies willing to get the drug or the vaccine out to the people at little or no cost. And COVID, it looks like, or Moderna is not looking to make a ton of money by holding the patents on the drug, which I think is admirable for both companies. But both companies are out there. Moderna has been my stock of choice, even though it's been tough to trade. Moderna was one of my favorites because it made the news a lot. At the time that I really was looking at it, it was doing well. But this is why I have the power of the VectorVest software, that as the stock pulled back, I looked for other stocks within our COVID-19 list to take a look at. Again, understanding now your what to buy. Looking at a graph on the stock is going to help to determine whether it's good enough to buy. What else can we use for our what to buy? Use the analysis from the VectorVest software to solidify your decision. So these are the two stocks that made the news that I'm going to keep my eyes on. We're going to get back into the software, and on our watch list, how come it didn't do that? Anyway, in our watch list, those two stocks are here. There's Regeneron, and then here's MRNA. Now, as I look at these stocks, here's another value add to taking out a trial to the VectorVest software. When I look at a watch list of stocks, it's automatically sorted by our master proprietary indicator, VST, which stands for value, safety, and timing. The VST will show me the combination of relative value, relative safety, relative timing, and the stocks that have the best combination of those three will be sorted at the top of the list all the way down. So notice that Regeneron, in my list of 11 stocks, has the third best combination of value, safety, and timing. From a what to buy scenario, that looks good. Whereas Moderna is towards the bottom of the list, and this indicator, VST, is cast on a scale between 0 and 2. Above 1 is favorable, below 1 is unfavorable. Moderna's got a VST at 1. Let's analyze it further. 1, Regeneron, the stock's price is trading at 602. The value is what we feel the stock is currently worth, is trading at $1,023. The stock is currently trading under its value. Our mantra is to have you in safe, undervalued stocks that are rising in price in a rising market. Well, clearly, Regeneron meets the first criteria of being an undervalued stock. As we look at Moderna, on the other hand, it's trading at 72.5, but the value is at 33.5. This stock is clearly trading over its value. Now, just because a stock is an overvalued stock doesn't make it a bad stock, and that's why further analysis using the VectorVest software is going to be ideal in helping you to make better decisions. Now, let's go look at our proprietary indicators, starting with relative value. RV looks at the stock's long-term upside potential, that over the next 1 to 3 years, this stock should or could it outperform an alternative investment in a AAA corporate bond. When you buy a bond, you buy it, it matures. After it matures, you get back all of your money with a little interest for saying thank you for buying into this bond. It's a relatively safe investment. Well, all of these indicators, RV, RS, RT, VST, and CI, are all cast on that scale between 0 and 2, where above 1 is favorable and below 1 is unfavorable. Regeneron's relative value at 1.59, clearly above the value of 1, so it's favorable. What we're saying, that the upside potential on Regeneron should outperform that AAA corporate bond by 59% over the next 1 to 3 years. So now I know this is a pharmaceutical company that is undervalued, that over the next 1 to 3 years, I wouldn't mind holding. It's got good upside potential. Moderna, on the other hand, has got a relative value at 1.13. This company should outperform that AAA corporate bond by 13% over the next 1 to 3 years. So still a good upside potential. The next indicator, relative safety, RS. This is an indicator of risk. Before you get into any stock, you need to know how risky it is, because some of you may want to take on a little bit more risk to get some more upside on the stock, where many of you will say, well, I don't want to be in a risky stock, and that's okay. This indicator, relative safety, will show you how risky the stock that you're looking at is. So relative safety looks at the consistency and predictability of a company's financial performance. Layman's terms, does this company make money quarter over quarter, year over year? High relative safety stocks are stocks that consistently beat or exceed their earnings expectations. Well, if a company does that over and over, it becomes very attractive to investors. Regeneron, not a risky stock even as a pharmaceutical. Whereas Moderna, on the other hand, has got a relative safety at 0.92, a little bit more risky. So the stock's got good upside potential, but if I want to buy it, I already know that I'm going to assume more risk to own this stock. There you go, folks. This is going to help you with your what to buy. VectorVest automatically goes to work for you in the analysis stage to help you to make a better decision in the stock. Now, the last indicator not the last indicator, but the next indicator, RT, is our technical indicator. We are one of the only companies in this industry that when we analyze a stock, we look at the fundamental analysis and we bring in the insight of technical analysis. Relative timing looks at the short-term price trend of the stock. Is the stock going up or down in price? Above 1, the stock's in an uptrend. Below 1, the stock's in a downtrend. So I can look at Regeneron. It is definitely fundamentally sound, but what's hurting it? The stock is not currently in an uptrend right now. Well, if I want to hold this stock long term, how about this? The stock's got good earnings per share with EPS, and they grow their earnings at a clip of 21%. The stock, though, does not pay a dividend. But I know that the earnings is the engine that drives the stock's price higher, and they grow their earnings at a clip of 21%. Regeneron still looks like a good stock. Just saying that right now from a what to buy doesn't look right yet. I'd like to see the RT go above the value of 1, showing me that the stock is now in an uptrend. Whereas I look at Moderna, it's got an RT of 0.96. Again, below that value of 1, the stock's in a downtrend. But they've got positive earnings, and they grow theirs even better than Regeneron at 32% a year. So I know that if I take this stock, it's got good upside potential. It is a stock that is a little bit more risky, and it's not going up yet. Maybe I wait on this stock. This is the kind of analysis that helps you to make the right decision at the right time, which helps to bolster your ability to have a solid trading plan of knowing when to buy, what to buy, when to sell. All right, so those are my 2 coronavirus stocks. Anybody have any question? How do I know when to enter the trade? So Eddie, that's a good point. Did I look at the graphs of these stocks? I didn't yet, right? Let's go right-click since they're both highlighted, all right? And let's go view the stock graph. All right, this is where you're going to make your decision on when to get in. Let's go put this on a 3-month graph. All right. I normally have moving averages on my graph, and I'm going to put on a 20-period EMA, 20-period exponential moving average. And the reason why I do that is because a lot of people in here are not VectorVest subscribers, and at least I want to give you a better view from a longer-term perspective. 1, I'd like to see if the stock is above the 20-day exponential moving average. If it is, that normally means it's a good time to get into it. But notice that I've got a green bar today. It's a bullish bar, but it's a closed candle, which means that the price of the stock is trading lower than it's open. So today, the open price was $614. The current price is $602. The stock is trending lower from its open. Now, why is it green if the stock's price is going down? It's green because this candle is higher than the previous day's candle. So it's green. But the closed candle means that the stock's price is trending lower from its open. So would I buy Regeneron today? No. I always want to buy a stock on an open green candle, number 1. Number 2, that indicator that looks at if a stock is in an uptrend or not, relative timing, is not above 1. So number 2, I'm not ready to buy it just quite yet. Go ahead. CT's question. If the color guard is green, and the stock is a buy, but the stock has been a buy for many weeks, will it still go higher? A lot of times it will. How many times have you looked at a really good stock that's remained buy for a long time? Well, it's because it's meeting all of the criteria for being a buy recommendation. I am never afraid to buy into a stock in a rising market that's a buy recommendation, even if it's been a buy a long time. The stock is doing exactly what you want it to do. But if I look at a graph to help me to manage the trade, I look to see if the stock is above that 20-day exponential moving average. How about when I see a stock's relative timing go from above 1 to below 1, telling me that the stock's in a downtrend at that point? Is that a good opportunity to get out? Absolutely.